What is going on, everybody? This is Jeremy Ritz from Courage Pays Better Than Fear Trading, and 3 o'clock was supposed to be the tariff announcement, but apparently it's now coming at 4. How convenient at market close. But what I wanted to do is just take a look at the SPX chart and see where we currently are, what's transpired since things started selling down back in February when we hit all-time highs, and where potentially we could be going here over the next couple of weeks to the next few months, especially as we get ready for another round of earnings that's going to kick off next week. So let's take a look at the SPX, where it is as of today, and see where potentially it is heading over the next few weeks. All right, so here we go. Here's a look at the S&P 500 index, the SPX. And the market is not yet closed today. Today is tariff day, as I've been talking about all week. But here we're just looking at the daily chart and really just want to talk through what we're seeing here with the technicals. But really, after we hit all-time highs back on February 19th, that started the big drop down. And, you know, this drop feels a lot deeper and steeper than it actually is. But you could see that we really bottomed out around 10.71%, and that was just here on Monday. We had first hit 10% correction territory on March 11th, got back down below that on March 13th, and then we revisited that on Monday. If you'll remember back to last week, on Friday, we had that big 112-point candle on the S&P, and we've had a little bit of a bounce here come into play Monday, Tuesday, Wednesday. And really the pattern has been, and I posted this on a short earlier, is that things would sell off pre-market and then get bought up. And we saw that Monday, we saw that Tuesday, we saw that again today. But we could see here now, as we're watching and we're waiting for this tariff announcement, that the bulls were able to push the price up above that 50 simple moving average on the weekly, but that acted as a resistance and it knocked it back down. And as we stand here right now, we are below the 10-day exponential moving average, which also really aligns with that July all-time high support. So that's from this past July. And what this looks like, if we're talking about chart patterns, we do see what appears to be a double bottom pattern forming. Now, in order for the double bottom pattern to be confirmed, we're going to have to break above that neckline with a strong close, which means we're going to have to battle this 200 SMA on the daily right here. And if we take a look at the last time that it got into that price area, we got there on the 24th of March, 25th, and then it was the 26th where things dropped back down. So the bulls were not able to hold it above that 200. And so that's the area that we're going to want to watch to see how much strength there is in this rebound. So the fact that that is where the neckline is shows that there's quite a bit of work that would have to take place from the bulls. You know, if we're looking at our VRVP, we do see quite a bit of volume in that area. But if it can get above that 200, and start getting some strong closes, then potentially it can push higher. But it doesn't mean that the bulls are out of the woods, because they're still quite a bit above it in terms of moving averages or just significant price areas. We can see that we have the 50 EMA on the daily here. We also have the 100 EMA on the daily right here, around 58.2891. And then when you go up above that, we have a gap that was formed from January 14th that we did fill on the way down. We're going to see if that would act as resistance on the climb back higher. And then you have the 50 SMA on the daily there, and then you have the 100. So again, there's a lot of work that would have to be done by the bulls to get this back up into an area where it could push into all-time highs. And if we look at this, it really comes down to how are tariffs going to impact the market moving forward. A lot of people are talking about how they're going to be inflationary. It's going to cause an already sticky bit of inflation to get stickier and maybe even increase. That's going to put pressure on consumers, which in turn is going to put pressure on businesses. And what I am watching to see is what is going to happen once businesses start reporting earnings, the new round of earnings, which happens next week. And why I think it's going to be critical when we're talking about this new set of earnings is because it's really going to be the first time where we're going to hear businesses talking about tariffs, their impact on their profits, their earnings, and most importantly, what their forward guidance is. And if these tariffs truly are going to have a negative impact to where companies are dialing back their guidance, I just don't see how that's positive for the markets. And really, that's probably going to set us up for the next leg lower. Now, that doesn't mean that that is going to happen or that it has to happen. But it seems to me that until that uncertainty surrounding tariffs and the impact on business is just clarified, that there is more opportunity to the downside than there is to pushing back up to all-time highs. However, we have to remember the market is irrational and it oftentimes defies logic, but that's what I'm waiting to see. And in order for me to want to go long on this market again, I want to see what's going to happen with this next round of earnings. And again, that really is going to kick off next Friday when we get those big banks reporting. And then really the first major company that I want to hear their report is going to be Netflix. That'll really kick off the charge before we start getting the Mag 7 earnings. But you could see here that there is a lot of work for the bulls above them if they are to regain the intermediate trend and start pushing higher. There's a lot of moving averages that it's going to have to push through. And that doesn't mean that it can't, because again, we're getting this nice double bottom pattern that is forming here right now. It's just, can they get it above this neckline, which happens to sit right there to 200 SMA on the daily. And if we just look down below, we can see there's really not much in terms of support for the bears to have to break through. We do have this 100 SMA on the weekly down here at 51, 51, 54. So if we do drop further, watching that to see, hey, is that a bouncing spot? And what is crazy too, it does feel like we've dropped quite a bit, but we are very, very far away from a 20% correction, which would put us at 48.93.42. And you could see that we have that 200 SMA on the weekly. So can we go lower? Absolutely. Can we go higher? Absolutely. But the one thing that is for certain is we're going to get some specifics, concrete answers about tariffs today, and then we'll see how that impacts the market moving forward. If you enjoyed this video, please let me know in the chat that you did and tell me, what are your thoughts? Where is the SPX going from here? Are we going lower? Are we going higher? And if you enjoy this video, check out the video that I did on Tesla and what potentially can be happening with its stock price in the future, especially after missing delivery estimates today. And check back for new information, new content from Courage Pays Better Than Fear Trading, and make it a great day.